Get ready for steady Federal Reserve interest rate hike. That's the view from markets in light of the stronger-than-expected consumer inflation data for January, said Subhadra Rajappa, head of U.S. rate strategy at Societe Generale. The markets are pretty much fully priced in for rate hikes into September, Rajappa said, in an interview with MarketWatch. Read, U.S. inflation rate climbs to 7.5% after another sharp increase in consumer prices. Markets are also raising the chances of a 50 basis point rate hike in either March or May, Rajappa said. In the last 2 weeks, Fed officials have tried to play down market expectations of a half percentage point move. They have made clear that they want to raise rates by a quarter point at that meeting. On Wednesday, Cleveland Fed President Loretta Mester laid out a game plan ere the Fed starts with quarter-point rate hikes, with more aggressive moves on the table in the second half of the year if the high inflation reading persists. Rajappa said she thought rate hikes at every meeting was a better strategy than a half a percentage point move. Historical experience shows that when the market has priced in a 70% or 80% chance of a rate hike, you tend to see the Fed actually does deliver the rate hike, Rajappa said. Neil Dutta, chief economist at Renaissance Macro Research, said if the Fed only raised its policy rate by a quarter point on March 16, it would be a dovish surprise. The Fed might not want to go 50, but they probably should, Dutta said, in a note to client. Sal Guattieri, senior economist at BMO Capital Markets in Toronto said, while this report, on its own, might not trigger a 50 bps inaugural rate hike from the Fed, the pressure will continue to mount if inflation doesn't begin to roll over this spring as policymakers anticipate. Steve Stanley, chief economist, Amherst Pierpont Securities, said he remained confident the Fed will want to limit the first rate hike to 25 basis points. Beyond March, I am not digging in my heels about much of anything, Stanley said. There will be more data for the Fed to consider prior to its March 16 meeting, with another consumer price index report due before then. Economists note that Fed raising rates isn't a panacea. Fed rate hikes won't do anything to improve supply chains, but higher rates ought to slow demand and bat inflation expectations down, said Scott Brown, chief economist at Raymond James Financial, in a note to client. U.S. stocks DJIA, minus 0.39%, SPX, minus 0.53% were down in the wake of the inflation data Thursday, and the yield on the 10-year Treasury note TMUBMUS 10Y, 2.012% rose very close to 2%, highest level since 2019.